All right, welcome to Idea to IPO. My name is Rob. I organize Idea to IPO. We've been holding events in Silicon Valley for many, many, many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 1 million members among all our meetup groups all around the world. We've organized, promoted, and produced over 5,000 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. Thank you. Thank you for all your support. We hold venture capital panels, legal workshops, networking events, and more. We hold an event every day of the week. Check out our schedule at ideatoipo.com. Just to reiterate, we launched on February 1st, 2010. What day is it today? February 6th. What year is it? So once again, 15 long years of holding events like this, dealing with panelists like this. And it's amazing that we've survived and even thrived. So thank you for all your support. Someone said another 15 years. I'm not sure about that. Our mission is to support entrepreneurs, promote entrepreneurship, build community, and provide value in the Silicon Valley startup ecosystem. So to that end, we provide content that is practical, actionable, and relevant. Stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the greater San Francisco Bay Area? Who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? 4. And one of them is 3 years old. So welcome, natives. Welcome. Whether you're born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important though, because we know many entrepreneurs are struggling financially. So we make sure our events are free or affordable. And if you cannot afford the cover charge for whatever reason, come talk to me and we've worked something out. And at most of our speaker events, we make sure that we provide a delicious buffet. Is that a delicious buffet? Oh, come on, is that a delicious buffet? I want to thank Perkins Coie for sponsoring that delicious buffet. So let's hear it for Perkins Coie. Applause. More importantly, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Besides this young lady and our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. So tonight, once again, we're grateful to Perkins Coie for hosting us at this beautiful venue. Is this a beautiful venue? We've held many events here throughout the years, and we look forward to many, many more. So let's hear it once again for Perkins Coie. Some of our other partners are here tonight. I would like to have them say a few words. Let's hear it for Ken and Cordify. Applause.
Thanks, Rob. Thanks, everyone. Good evening. My name is Ken. I'm founder CEO of Codify. Codify is a software development shop. We actually do software development for startups and help them through their ideation to MVP phase. We also provide specialized services called fractional CTO services, and we help the companies grow. And if you want to know more about what services we do, please come to my desk. Thank you.
All right, next up, let's hear it for Anand and Quantia. Applause.
Hi everyone, my name is Nan. So we have a startup. We are making network infrastructure, which is when you're doing training, you're doing models, LLMs, and generative AI. You need a place to go to train, right? Either right now you have no choice. You either use NVIDIA's or you're using cloud, right? So NVIDIA is very costly. So for base part, 100 H100, it costs like $9.5 million for 128 GPUs, right? So plus the storage costs more than $10 million. So we doing the infrastructure lots of cheaper, 20%, to 40% cheaper, right? So anything you want to know more, come talk to me. The desk is right there. Thank you.
All right. Next up, we have Kimberly from Silicon Valley Alliances. Applause.
Okay, Kimberly Weefling. I'm a physicist by education, but don't worry, I have useful skills too. I go all over the world, mostly working with global Japanese companies to help them cure the boss hole. There's an epidemic of boss holes. You know what I mean? That suck your will to live. Yeah. You can't drive a car here without getting a license, taking a test, but you can be the leader of a team, the startup founder, or a CEO of some company and not know what's on one page about leadership research. That's what I fix. There's a global cure. It's called the Kimberly virus, and there's no vaccine.
So though our local mission is to support entrepreneurs here in Silicon Valley, our global mission is to democratize entrepreneurship and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea to IPO. Check it out. We have tons of videos there. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Our partner in this endeavor is Michael Payne, one of the top professional videographers in Silicon Valley. So let's give it up for Michael. Applause.
Hello, everyone. I'm Michael. I help tell stories for companies and individuals, be it a customer story, how to use a product, proof of concept. I won't bore you with the long list of types of videos I've done. I've done almost everything. So if you're interested in having me or talk to me about any of my services, or if I can help you out in any way with any advice, I'm happy to talk to you. You can get a hold of me through Rob. Thank you.
So here's the schedule for the rest of the evening. Our panel will hold a brilliant, compelling, dynamic, entertaining, and scintillating discussion. Right, panel? At about 8 o'clock, we'll open it up to questions from the audience. At 8:30 p.m., we'll wrap up the program. You can stick around, network, socialize, connect. As a courtesy to Perkins Coie, we need to leave the building by 9 p.m. However, there will be an after party. More on that later. So without further ado, I'm going to hand it off to our distinguished moderator, Armand Palavan, partner here at Perkins Coie. So let's give it up for Armand and our panel. Applause.
Thank you for the panel. Thank you, Rob. Congratulations for the 15th anniversary of your amazing work. I wanted to just acknowledge there's a couple of my colleagues here, my partner and colleagues. Susanna Gazzo, stand up. Stand up. So you guys know what she does. Go ahead. Give a few words about what you do.
So my name is Susanna Gazzo. I'm a counsel at Perkins Coie. So Perkins Coie is the bullseye firm for venture finance, ECVC work. And so we represent amazing companies that come from Stanford AI professors, right? And VCs that are top notch, right? And we do this completely passionately, right? And so all our clients, just because our vibe is so we're kind of nerdy and geeky and watch sci-fi movies or whatever, and so we're very, very genuine, and and it attracts all these amazing entrepreneurs as well, right? And so a lot of times we're very much heads down, working really hard, but ultimately we incorporated Amazon in Seattle. We're Seattle based originally.
Boeing.
Yeah,
Incorporated Boeing.
Yeah. And so anything that's
Tria,
su-
Zero,
yeah,
Powder.
Yeah, anything that's super cutting edge, like, I mean, we work with OpenAI, we work with Meta, like we're just, and so yeah, like we're like have a big ECBC group, and like we would love to like work with you or talk with you. Like we have a full-time person that connects companies with the VCs, like free of charge to any clients, and so he's just like a connector, exactly what we were talking about, right? And so, I mean, we believe that like the only way to grow is to like really talk to each other, right? Like use our network and I think it makes a difference for everyone, both sides. So
Totally agree. Bullseye. Thank you so much, Susanna. Alberto, Alareza, my partner in the patent process.
Just want to say, I'm Al Ariza. I'm basically a technology attorney. I protect your technology. I like to talk to founders and innovators about their tech. So if you have something that you've innovated on, that you want to protect, that you want to market, that you want to commercialize, talk to me.
Thank you so much. Thanks, Al. And it is true. Talk to him, and Al has a very broad ability to really help you guys as clients. He's done health tech work for me and my clients, and he's done semiconductor work, very complicated semiconductor. So we look forward to continuing our relationship with everybody in the crowd as well as all you guys and ladies. So Jennifer, tell us about you, about the fund, about whatever you want us to know about the fund, the size of the fund, it affects you right, maybe around those 3 or 4 facts.
Okay, the key data. Welcome everybody. Great to be here this evening on the 15th anniversary. Congratulations, Rob. I'm Jennifer Vancini, a general partner at Mighty Capital, which is based in Silicon Valley. We invest in Series A, B2B tech, software-based solutions. So enterprise SaaS companies in security, DevOps, automation. A little bit of health AI, but still with the B2B business model, and some fintech and insurtech. What's unique about us is we're really capitalizing on the growing importance of product management in driving digital transformation. And we leverage a network of more than 500,000 product managers and tons of programs that support them to get insights and deal flow, but also help our companies with their go-to-market. Did I cover all your points?
I think so.
Were you listening? No,
Yes.
he already knows me. So, yeah.
Somebody sent me a
He knows me already.
yes, no, it's great, and we've had the occasion to work with each other, or just talk about it for a while. Go ahead, Yash.
Hello, everyone. Thanks for having me here. My name is Yash Hemaraj. I'm a general partner at BGV, Benamo Global Ventures. We invest in early stage enterprise AI companies. A lot of our companies are born in innovation hubs such as Israel, France, India, etc. We help them come over here, help them scale up over here. I also run a pre-seed fund called Arca Venture Labs, where this is specifically for Indian founders building from India, but helping them coming over here and helping scale up over here. Typically, when we invest from our main fund, we invest about $2 to $4 million in the pre-Series A to Series A type of rounds, and we have some capitals on both sides of this so that we can write some follow-up capital. Thank you, Arman, for moderating this. Arman, this is my 11th year in venture, and for all of those 11 years, Arman has been our counsel. So
Thank you. It's been a pleasure working with you, Yash, and the entire BGV team. It's really an honor. Go ahead, please, Keisha.
Hey guys, I'm Keisha. Congratulations, Rob, again. I am with BDev Ventures. So we are a CVC, but we're non-strategic. We invest late seed through Series B. We're minority investors. Our largest check to date is $3 million, but we are greenlit to go as high as 5 to 7 in some of those later rounds. Our differentiator, in addition to capital, we provide all of our portfolio companies with access to a lead gen platform. So we are actively helping our startups that we invest in, actively helping them grow their revenue, which is really important at those stages. I'm sure there's a lot of other things that I can tell you later.
Hi, I'm Ephraim Lindenbaum. I'm the managing director of Advanced Ventures, and I'm a recovering entrepreneur. So I started on your side of the table, built a company and exited here in Silicon Valley. We've been investing since 1999. In fact, I've been investing with Bill longer than anybody should know. And in turn, we invest across technology, health, and wellness. As you can imagine, since 99, it's been a lot of evolution. We invest today very much around the AI aspects in many of those areas I mentioned.
Thank you. Thank you again, Rob, for having me, and wonderful to be in a panel with so many amazing people. And thank you for doing this moderation, which I think is going to be awesome. I mean, we don't know yet, right? But we'll put you down on the spot for that. So I'm Preeta Ram, and I also have been an entrepreneur, so I do also feel the pain every now and then. In particular, I try to be the kind of a VC that your parents never warned you about, shall we say. You know, I want to be the person that you can call at night and say, I'm hungry, I've just arrived, I'm in San Francisco airport, and I drive out from Los Altos to buy you dinner and I get you a drink. Other than that, when I'm not doing that, we are a fund, Pure 70 Ventures, invests broadly across health. We call it the 3Ds: digital, devices, and drugs, the good kind. And we do that because we think health and wellness is something that concerns all of us. It concerns you, your parents, your children, your grandchildren, wherever you might be. And that's so super important. And every day, why I go to work every day is because I get to hear these amazing pitches, which to me are full of hope. Hope for a better health, hope for a better future. But you don't want to hear that. You actually want to hear early stage, yes, seed to B, typically around Series A. Check sizes will vary depending upon where you are in that. And we look forward to meeting with you guys, and girls. I'm particularly fond of having women founders in our portfolio mixture. We have about 12 investments, and we probably have 4 or 5 to go before we go to the next fund. Back to you.
Back to me? Thank you, Preeta. By the way, I'm hungry, I'm thirsty. Oh well. Okay, yeah.
In fact, Rob, if we
Just
can have some
checking.
water, that would be great at the table.
Just checking. Yeah. So, yes. And yeah, Rob, I don't know, was I at your first event or not? I can't remember, but it was long ago and far away. But always delighted and impressed with the gang that Rob gathers at all of these events. Again, my name is Bill Reichert, and I'm a general partner at Pegasus Tech Ventures. I started here in the Valley long ago and far away. Rob is very worried that I'm going to give my complete life story, but I won't. But I started as an entrepreneur while I was a grad student at Stanford. Before it was fashionable for grad students to start companies, I started a company, did that 4 separate times. 2 of my companies went public, and then I started a venture firm with called Garage Venture. And our mission in life was to take the F stew out of my. In any case, my channel, I say. Are we back? Now we're back. Are we back? We're back? Okay. So, in any case, fast forward many years, I came across Pegasus Tech Ventures, a big global venture fund. We merged forces and launched a program called Startup World Cup, which is now the largest startup pitch competition on the planet. Amazingly, kind of accidentally, it grew to be over 100 regional competitions around the planet. So that keeps us pretty busy. But our day job is investing primarily for multinational corporations. I burned out the battery already. We invest primarily for multinational corporations in pretty much every sector you can imagine: healthcare, health tech, biotech, SaaS, material science, ITC, an amazing amount of hardware. Turns out that more than 50% of our investments are in actually hardware companies, which is relatively rare for Silicon Valley venture investors. But across stages, across sectors, and across geographies, we invest around the world. We're a $2 billion venture fund. Our biggest deal is SpaceX, and we have a number of unicorns in our portfolio. But we also have a number of seed startups. We've spun a company out of the University of Michigan. We've invested in grad students here at Stanford. So we're all over the map. But
Great.
delighted to be here.
Thanks, Bill. So, Prithvi, just wanted to set the stage for one question that you raised. we won't if you have 6 or 7 people talking, there'll be very little moderation. So, so I just wanted to share that with you. But let's get going and get started. So, I don't want to talk about AI first. Everybody talks about AI. Everywhere you go to one of these things, they keep on talking about AI. But I want to start the conversation somewhere else. There's a whole new world going on in the last couple of 3 weeks, right? With what's going politically. And politically, there are many things that are happening that are going to have many different kinds of impact on what we're doing. Okay. I was talking to someone at BGV actually just recently, and what they said is they felt that the Biden administration just kept people back from moving forward. That was the best way they could kind of like explain it, and now they feel that that's not the case. So, Bill, let's start with you in the far corner. What has happened in the last 2 weeks, and what is going to happen, do you anticipate, that's going to affect us in Silicon Valley and really the venture investment, landscape?
Well, without getting terribly political about it,
Yeah, keep it as low on the political side, but
no,
it ties to the issue.
what we're experiencing, what we're seeing now, what we're hearing out there is because of the unbelievable uncertainty that has now entered into our universe. Everybody is holding their breath and trying to figure out what is going to happen next. But 2 days ago, we were on a call. We're trying to do a funding for a climate tech company. They had been awarded an $8 million grant from the Department of Energy. Co-investors were lined up to match that, to help them with their first of a kind.
Right.
And everybody's paralyzed.
Right.
Everybody's paralyzed. So I think, the question is, will this clarify
right.
within a period of time that enables any of us to move forward with some confidence
right.
that, things are going to be stable.
Right. Preeta, that kind of a sentiment or those processes don't apply to all the companies, right? Not every company is a, $8 million grant from U.S. blah, blah, blah funding or from Health and Human Services or CDC or other places. What are you seeing this effect on portfolio companies that you guys are dealing with? Are they having the same kind of a effect on them of uncertainty of funding and or not?
There always is uncertainty in funding, and last year was a bit of a bloodbath. We saw in 2024 valuations go down, and we thought, okay, we're going to get out of this in 2025. Hasn't happened yet because I guess 2025 is still pretty young. But I'm still seeing a fair bit of difficulty in going from A to B, for example, Series A to Series B.
But that's always been there, right?
It's always been.
It's always been there. B is the
It's
is
true.
the mother of all.
Perhaps because I feel their pain so much, I feel like it's worse now. I honestly believe that things will get better in terms of the funding situation right around maybe second quarter. So I'm being optimistic, but we couldn't be VCs if we weren't optimistic. We just have to believe in positive. So to answer your question without too much prevarication, we're seeing a lot of trouble. Portfolio companies are having trouble both raising wherever they are, whichever round they are. So I am looking forward for that positive change.
Okay. Now, Ephraim, my oldest friend, we've known each other for a million years. So Ephraim, I was, if you put that together with where the market is right now, right? And the market is frothy, though, here and there's these, events that really takes down the market by $1 trillion and then it goes back up. Where is the congruity of these things, right? Because let me paint the landscape. Since the election day, we have seen a floodgate of deals in M&A transactions, in financings, and frankly, some of those financings were down round financings, and so it's not a happy thing. We just kill this thing, then you have all this frothy market at the same time, and you have this uncertainty going on that part of this, executive orders have placed. Where do you put all this together? I mean, how do you see all this shaking out, or is it a second quarter thing?
Yeah, I mean, I think that the underlying issue is the exit opportunity. We have planes backed up, venture deals backed up for 5-7 years. Last time we saw this was coming off the 2007, 2008 collapse cycle. And until the 2012, 2013 IPO boom and the liquidity, everybody remembers Facebook and LinkedIn and many of those companies kind of coming out after a long drought. We're very much in that cycle. And what tends to happen when you're backed up that far is it pushes down across the whole space. It's been challenging for liquidity. It's been challenging for venture. And what we've really sort of seen here is kind of a P.T. Barnum story in venture. There are a few entrepreneurs that are really good at raising money. They hit some amazing dollars and valuations, and then everybody else suffers and dies underneath them. And
Are you talking about Sam Altman?
we see them all the time, and somehow many are successful, and I don't know, and we bought into a few, and some have been successful for us. But in general, the market's been very, very, very tough for the last 18 months for a lot of startups. I mean, we tend to have a much larger focus on companies having customers and revenue. We're so old that what today is seed round used to be A rounds when we did them. I mean, I did a B round. I did an A round with Bill years ago that would be a weak seed. You guys would be like, I don't even want that. So it'd be a pre-seed, yeah, and most people would just walk away. So I think there's a lot of that involved. So the exit trajectory is very meaningful, and then we've got all this disruption on AI happening. And I didn't want to bring it up, but I don't look at it in this sort of frothy AI story, because we had an exit in AI in 2004, and I thought that was great. We put that in the can. We're never going back there. Here we are again. So it's just it's like the third or fourth coming of AI. It's just going to make things a little easier. It's like the Java of all your generations. Just put it in and we'll all just move on. If it was a great idea and people really cared about it and customers really want it, we'll pay you money. Give us a ring.
Keisha, you guys have I'm so happy we have some international perspectives here on this panel, which is really great. So tell us about Latin America. What is going on there? And where, with respect to the portfolio companies, and then the other thing with respect to the buyers, right? Because it's the buyer opportunities that really creates the opportunities in venture capital, and the growth of venture capital has all been running around that issue. So give us some aspects of your thesis as a fund on those issues.
So that's a really hard, this is not in the pamphlet that I got. No, I'm kidding. So I think when it comes to LATAM, so about 30% of our portfolio is LATAM based. And we have investors in Mexico City. We have investors in Sao Paulo. LATAM is a really important market for us. And I think they're experiencing, 2020, 2021, and then the big dip. That was a global event. And I actually think that the United States has, the venture market specifically, has, right. We haven't bounced back. And I think actually we're still very much so seeing the fallout. We're still seeing companies that maybe raised a bridge and are still eking by, but are unlikely to raise again. I think there's quite a few venture funds that raised and made a lot of investments in those really high valuations that are unlikely to raise another fund. And they're still around. Like we're still, we're still dealing with some of that fallout. It's not kind of shaken out yet. And I think that's especially true in LATAM.
And these are LATAM venture funds we're talking about?
I think that's global.
That's global.
Yeah.
So, but what about LATAM? Give us a little perspective on Latin American portfolio companies, the venture market in Latin America, how many funds are really active, and I know that all is very large in terms of broad, in terms of.
So I think LATAM is still, it's actually it's like when people talk about Europe, right? Like you've all had this, and it's like, oh, where'd you go on vacation? I went to Europe, and you're like, oh, cool. Like, where? It's a lot of LATAM is a big place with a lot of, there's different languages, there's totally different cultures, there's different business cultures. I think there's a few epicenters right now that are still really interesting, specifically Mexico. The manufacturing tech in Mexico today is wildly interesting. Now, how the current political climate is going to change that is creating a lot of uncertainty. But we're also seeing, we just invested in a company in Brazil called IPO Health, and it's the next Brazil, well, like knock on wood, it's the next Brazilian unicorn for sure. They are they're giving people access to healthcare through WhatsApp. So they have, I think because the regulatory market is different in a lot of these regions and countries, there are opportunities to explore new products there in ways that you might not hear in the US. But I think overall, the trends that we see in venture here are the same trends that we're seeing play out in LATAM today.
Interesting. I'm sorry to just harp on this for a bit because it's fascinating. On the WhatsApp side of things and healthcare services, is that because the healthcare model is for free in Brazil, but it's a state?
No, it is not. So it's actually their healthcare system in Brazil is very similar to ours in like the private insurance.
Okay.
It's modeled very similar after the US. And what they're doing right now, just how your employer, or I assume you're my employer, like I get healthcare through my work.
Yep.
So this is an employer program. So employers are buying this and giving it to their employees, and through WhatsApp, you probably have maybe Sutter Health. I have like my Health Online app, and I can make appointments with a nurse practitioner. So that's the same service, but because it's through WhatsApp, it's really connecting people to that service in a much more real, easy way.
Wonderful. But thank you, Hisha.
Yeah.
Okay, Yash, you have been here for a long time. You've been doing a lot of venture investments, and you guys started doing AI investments a decade ago, right? But you also have this India angle, which is very interesting because a lot of people went into India, a lot of venture capital funds went into India, Sequoia and all these other ones, and then they kind of came out, right? But you have created a real interesting space for yourself in the India space that I think is really fascinating. So could you tell us a little bit more about that?
Yeah, thanks, Oman. So when you look at India today, right, it is the world's youngest English literate, computer literate population in the world with a median age of 28 or 28 and a half. So what does this do, right? So in the context of enterprise AI, right? So one, India is known for front end, back end, the entire full stack development. That's easy, right? People know, and then, a lot of IT services companies have been built out of there. A lot of US customers use those services. Second thing, what has happened, because of how easily people can talk computers, talk SaaS, talk business, you can do marketing ops, sales ops, customer success ops in India. What does this mean? It reduces your customer acquisition costs, right? So, post-COVID, it has become easier to do this with Zoom, especially the first few meetings is all done on Zoom. Nobody is flying out to meet, even though return to work and people are flying out. That's only for the closing the deal, not for the first conversation, right? And third thing is when you look at AI companies, an important aspect of building the correct AI company is having access to clean data. And a lot of the folks, a lot of the entrepreneurs who don't approach this the right way are just boiling the ocean with a lot of bad data. And what happens when there is a lot of garbage in, garbage out, right? So in India is probably the only place where sitting alongside an AI engineer is a person who is trained to kind of go through some steps, execute it, and get out, right? So this BPO industry that was very active in the 90s and the early 2000s has trained a set of folks to kind of, go and do data labeling operations. And having the AI team sit next to the data labeling team really accelerates the pace of development. So this kind of gives the potential for building AI companies from India. And now, and while we were growing up, the common joke is you're either an engineer or a doctor, right? And so now, if you don't start a company, the parents are asking, why haven't you started a company? So this is real. So everybody has caught the entrepreneurial bug. So these are all the things that are coming together at the right time. And India is also uniquely situated with respect to entrepreneurship, with respect to being friendly with every country in the world. There's some frenemies, but in that way, it's kind of has this kind of foundation, a platform to build some of the next best companies coming out in the enterprise space. So while there is a great domestic opportunity, we only focus on companies that are being built from India, which are approaching the global market. And one thing about that, and I'll kind of pause.
Fascinating.
While India is a great place to build companies, when you're really early, right, you have to come to the US market. Why? US is the largest enterprise market. Most importantly, US is the world's early adopter market. Nowhere else you go. Go to Singapore, go to Middle East, go to Japan. They show me the 5 Fortune 500 logos before we even let you into the door, right? But in the US, if you're solving a problem for somebody, they're ready to put their badge down for you. So it's very important right when those early stages, be it, and we invest in not just in India, but Israel, France, Japan, India, a lot of these global entrepreneurs, right? And it's very important that until they get through their Series B stage, they approach the US market and kind of build that initial kind of motion, go-to-market motion here, right? And it is easy. People are, and the margins are higher. People are ready to make quick decisions, etc. But it's not easy, especially if you're an immigrant entrepreneur. And those are the things that we have systematically, all of us in the partnership have been on the operating side. We have all built companies. So we try to bring that playbooks, kind of the network for these international entrepreneurs. But kind of if you're building from these geographies, coming to the US, building here, and then approaching the rest of the world is a great strategy. It's and especially with the AI boom, I think we are kind of looking at the next wave of disruption in the enterprise space.
And Jennifer, I am going to talk about the pandemic.
Oh, yeah. Okay. Because you see another one coming, or
Yes. Is some of this stuff going to create another pandemic? Is cutting off the vaccination throughout the world going to bring back measles and polio and other things? I think, and then if that's the case, or not the case, either way, it would be great to hear your perspective about where the alpha and the beta is on this stuff.
okay. So, that's circling back to kind of the macro. It started with the politics of. We're definitely in a time of great uncertainty, great change. There will be seismic shifts and shocks, and that's how change comes. It's in that disruption that there's the opportunity. We saw that with COVID, seismic shift when everybody had to address digital transformation overnight, schools, companies, healthcare systems, and it created the rise of a lot of innovation, a lot of companies that unseated. How long was Cisco and Microsoft trying to own video conferencing, and they had the worst products? So, somebody came up with a better product. This is why we focus on product management, because it drives digital transformation. And if your product isn't addressing a real business need, a real return on investment, your customers, need to say, if you take this away from me, I have a huge problem. You're not going to be able to fake it. Like marketing can no longer smooth over the rough edges, or so the products that could really solve those business needs in these rapid times of change. Now, every time a new administration comes in, we ask ourselves, how is this going to change our strategy? Does it change our strategy? It seems like time and time again, the conclusion is it's actually kind of irrelevant, except on the edges where you find the alpha opportunities or look for risk. Like, are your portfolio customers selling to government, and is that in a good way or a bad way now, right? As the times change. So kind of irrelevant as long as we're sticking to those fundamentals of, and some of the panelists touched on this. Is the company got a real product? Is it making money? Are they being capital efficient? Do they have a good leadership team that can navigate how to grow and scale? And these are very challenging, big challenges as operators. We know growth is not linear, right? It's in step stages. A lot of times there's a down before there's another up. So I'm kind of giving you a very roundabout answer. If I want to come back to the pandemic, Very well could be. There will be humanitarian issue. This world, the geopolitics, no matter which way, which aisle you're on, massive change, massive disruption, massive tensions, a lot of opportunities. There will be a lot of winners and losers, but the world is global. And so if something happens in Kenya, it's going to affect us here.
Okay.
Right.
It was a big question, and thank you for the answer. And it's interesting. It goes to one issue that I can think of: the product fit to market.
Yes. Yes.
Right, which really is in our portfolio companies is the biggest issue, right? Because healthcare and this video health just became an industry that was flopping for years when pandemic, came up and doctors actually started using video health, right, for their healthcare needs. So, so what are those disruptions that you can kind of like think about?
Yeah, where's the
that
industry going?
where is the alpha? If an entrepreneur comes in and says, I want to do this, and then you say, God, this is amazing, but think about this part of it. Right?
Product market fit is, first of all, only a moment in time because it's going to change constantly. And so we look for founding teams that have founder market fit. Like, why are you the right people to find, those spaces of opportunity and really have credibility? Like, security is an area we invest in. I recently saw a company trying to pitch a new encryption system for quantum. So quantum will be an area of disruption, even though it's, behind AI in terms of how far along it is and the real opportunities and threats. But we're going to develop a new encryption system. I look at the team. There was nobody from security in the leadership team, and the CEO was from like advertising or something. And I mean, I know you guys have done security too. It like blows my mind because I used to work in cyber. If we don't have 50 people in common, there is no way you have founder market fit in security, as an example. In healthcare, very much the same, right? If I don't see medical scientific credibility, and you need that to find the real, not just product market fit today, but what's happening tomorrow and the real innovation, and know how to sell to those customers.
Yeah.
Right.
So we have one more set of questions, and we have time for everybody to participate in this.
Okay.
Yash, product market to fit or the alpha in the new world. What are some of your thoughts?
So when you look at, so I'll take an analogy for the connected cars, which, autonomous cars, right? When you look at, if 15 years ago, if you were sitting in a panel when Idea to IPO was originally started, and we talk about, hey, you'll see like a completely autonomous vehicle running on the streets of San Francisco. It's actually has a better quality of experience. People would be like, impossible, or wait until it hits somebody, wait until it stalls somewhere else, right? So, and people would not believe it. I mean, people around here would be skeptical. But guess what? All of those things happened. The car got stalled, hit somebody, and people took each one of these as challenges and addressed this, right? And today you have this massive innovation that's happening in the automobile space, and you have services like Waymo operational. So where am I going with this, right? So the pace of innovation in AI, especially within the enterprises, is so massive. There are multimodal techniques that people have available, and especially now when you look at the majority of the legacy industries in America, they are sitting in really low levels, level 0, 1, 2. If you're familiar with the autonomous car kind of, the level 0 to level 5 automation, really sitting at level 0, level 1, level 2. And what has happened is with AI, all of these industries have woken up. And there are some really smart entrepreneurs who are looking at some of these problems, and they were like, this cannot be this way, And some of them with that domain expertise are now waking up and saying, I'm going to do something about it, and putting in like completely reimagining business processes in some of these industries. So you'll see some of these industries go from low levels of automation to high levels of automation, completely leapfrogging the rest of the industries. And this shift is trillions of dollars of economic benefit that they are bringing, right? So that is where I think we are headed to, verticalized solution using AI, but typically AI by itself is not going to help. You need to kind of combine AI with deep workflow automation, and data. Like, you look at AI, data, and workflow automation come together in a full stack vertical solution, right? So that's the next best opportunity that we see.
Great. Data. Just one more time.
Data, workflow automation,
Automation.
and multimodal AI.
Yeah. Great. Perfect. Write that down, everybody. Okay. That's wonderful. Thank you so much, Josh. This is actually, and I know you love this workflow automation issues and the companies you've invested in. So it's been very successful for you. Keisha, how long have you guys been investing?
We've been investing about 3.5 years.
Okay.
Pretty new.
What's the boast of one of your companies that is the greatest company you guys have invested in?
They're all great. I don't know what you're talking about. They're all amazing.
Wrong answer. You don't get a pass on that one.
I will say, so I fully agree with everything you just said. And that's one of the things that we're looking at right now too, is I'm most excited about vertical approach to AI. And I think that is going to allow companies to create network effects and build defensibility at a time where products are becoming more and more challenging to defend. So from that perspective, we have invested in a few horizontal AI approaches early on, but today we are not. We're really focused on those more vertical approaches. We just invested in a really cool company late last year, Pretelligent. So very similar. They're utilizing AI in the property tech space. So a vertical approach. We just invested in a company. I mentioned People Health. They're using a lot of AI in the back end to connect answers to questions, using a lot of natural language processing. So I would say every company that we're investing in right now is very much so with this exact approach. How are you taking AI, taking these new technologies, applying them to a vertical, and creating a defensible space there?
Great. Thank you. And Ephraim, what's the best company you've ever invested in? What was the blockbuster?
Well, that's like asking which kid you like best. You can't do that.
No, but there's a valuation. There's a public markets. The sales price.
We just wrapped up our first exit of 25, so I'm just really on a happy move. So, yeah, I'm actually going to flip the script and do a little AI lecturing here to everybody. So, all of the AI is great. People like Bill and I and most of the other panels, we've seen wave after wave after wave of tech come through. And the thing that I think you really need to keep in mind, if you take away a few key data points, one, product. Jennifer was talking about it, her firm, everybody's talking about product. Two, customers. They're really important. If you don't have any of those, it's difficult. And then the last one, and this, this is a biggie, but revenue. You need to get those. Take those 3 words, put them above your desk, and then while you're thinking of all these great AI things, make sure that those 3 things apply to those things, right? And then as a founder, we have sort of 5 tenets, and you can mix them up in whatever order. I always mix them up depending on the crowd, but these are the things that you should be thinking about as an entrepreneur. Authenticity, big one, honesty, transparency, conviction, and tenacity. Okay, so those are the things that put these things on the wall. And when you come to us, make sure you're exhibiting all those pieces, not just a great new AI thing, not a great other thing, because oftentimes by the time you're at an exit, there's the next thing, whether it's quantum computing or something else, and you're going to need to pivot just like we've all pivoted. So embrace those things and then apply what you're doing with that underlying current.
Can I? So at the end, you're just talking about these are fundamentals. That has not changed.
Right. AI will not pave over any of those things. So, I really want to bring you back to that because great companies get built based on these types of things, right? And, don't get lost in the noise. You still have to do all these things and have a great AI or health or whatever other app you want to do. But don't lose sight of that.
Yep. And, being transparent and honest as a founder is a real big issue, guys and ladies. It will come out because there's a long tail to the investment and the relationship with the board. And the ones at the board level or the founders of the company that are making stuff up and trying to kind of make up numbers or throw numbers in there that will just get people to invest, and the truth will come out, and it's a very, very ugly scenario when it does come out. You look like a real charlatan, and it's really great. So Pritha, did I say it right?
Thank you so
Okay. I wanted to just ask you a couple more questions on some of the ways you pick your investors or your founders. Is it management or market?
Ooh. Do I get to say both?
How big is the market or how strong is the management?
Well, luckily for the founders in the room, it's a whole bunch of things. So it's not one versus the other. I personally like to invest in founders and teams that have all of the things that you said. I would add confidence. Someone there, the CEO, has to have the Can you hear me? Yeah, has to have the confidence within because they are projecting outwards to the investors, to the customers, to the clients. Market is very important, of course, the size of the market. But more than that, in healthcare, there's a timing of the market. There was a survey that went out and said 60% of Americans don't trust AI in their healthcare. Like, forget this. That's changing. And so people like you in the room, the innovators, you have to make that change happen because there are ways in which AI in healthcare can and will, I'm an optimist. Remember I said that, can and will improve our healthcare systems. It has the potential, but it needs the market to adapt. The kinds of things that have happened, the innovation that has reached other industry sectors, it is still slow. I mean, healthcare is slow to the party. So yes, the management is super important. Remember, I'm going to take the CEO out to dinner at night. He or she had better be someone that I don't mind spending time with. So it's the management is super important. But the market also makes it difficult or easy to adopt.
You opt in for both. So, Bill, you were shaking your head. You were saying,
Bill?
yeah. What is this question? Where did it come from? So go ahead.
I'm going to toss a hand grenade out here.
Go ahead. Please do.
See what happens. You know, I mean, I love you guys dearly. but you know, if the venture capital industry were based upon finding companies that have founder market fit or product market fit, we would not have a venture capital industry today. So I'm about to hit her. No, I mean, SpaceX, excuse me, where's the founder market fit there? Where's the product market fit there? No. You know, I mean, Tesla? No. Netflix? No. Airbnb? Uber? Travis Kalanick? Are you kidding me? Right? Drugs? Pick drugs. I mean, we would have no drug development in this country. We would have no venture capital supported drug development in this country if we were dependent on product market fit, right? Because you have to fund it before it gets to the FDA, before you can prove that it actually works, and they actually have to sell it. It's not different at all. It applies to all of these technologies.
The hand grenade is in, everybody. It's blowing up.
So yeah, if you want to be a private equity investor and wait for product market fit and then go in and do some investing and financial engineering, God bless, that's private equity. But I tell you, venture capital is fundamentally about figuring out, is there a compelling value proposition that this team can create before it's proven? If you wait until it's proven, you're a private equity investor. Okay, I'm sorry.
But isn't that similar, right? We're still asking the same question, which is like, why you? Why now? That's what founder market fit getting.
Product market fit.
No, isn't it?
Okay,
It is product to market fit.
My favorite, so one of the questions we were supposed to answer is, what was your stupidest investment, whatever. What was your worst investment ever?
I didn't want to ask.
Right? So, no. You know, my worst investment ever was when I met with the founders of Tesla before Elon and looked at that company and thought, this is inevitable. So when I saw Tesla, I thought this is inevitable. But oh my God, these guys are delusional about how long and how much money it's going to take. And of course, my friend, Nancy Fund, she invested. I didn't. I did not invest. Nancy got the second Model S that rolled out of the factory. I drive a BMW. So in any case, all I'm saying is that yes, we want to see that you're paying attention to the customer. We want to see that you know something about the domain. We don't care how big the market is. Market size is not a key factor. Market opportunity is the key factor. I've never seen a company fail because the market was too small, right? So show us that you really, really understand the market opportunity. Travis understood the market. He had nothing to do with limousine services or taxi cabs. He just saw that there was an amazing opportunity there, and he figured out how to cobble together a bunch of technology to take advantage of it. He had an incredibly compelling value proposition, no competence whatsoever just to justify investing in him. Other than
I'm going to springboard on that now. A couple things there.
Okay, Jennifer, go
Couple
ahead.
things. Stage is important. Pre-seed, there is no product market fit. It's definitely about the vision.
Well, would there be any startups if there weren't investors in pre-seed?
Agree. But by the time you're at B, even the pharmaceutical company, there better be some revenue proof points and product market fit. So, stage is a consideration. On the market size, I don't look at all those TAM graphs you have in your slides, even though you have to have them. But I like to hear the story of how you're going to create and dominate a brand new massive category, right? And so that is sort of a bit to what you were saying. What's really the big opportunity there? And if I'm going to get 1% of $1 billion market, that's really boring, actually, from my point of view. So I'll stop there because we're at the end, according to Rob, although I think
wonderful conversation. What a fabulous discussion. And there was very little discussion of AI. How about that?
Thank you. Thanks.
Before we get to Q&A, how can audience members get a hold of you? Jennifer, how can people reach you?
Yeah, LinkedIn is the best. I'll just add a couple things. If you're ready, you have a pitch deck, you're late seed or A, and I think most of this room is earlier than that. There's an email, dealflow@mighty.capital, 100% guarantee people are reading that, even though it may look like some automation. I'll also add, we added a tool on our website that we call the AI Partner. Doesn't make any decisions. We actually don't even see what you're submitting, but founders have loved using it. They submit their pitch deck and they get non-personalized feedback on the deck, and we've gotten really great feedback on that. So I'll stop there.
Yash.
LinkedIn. You reach out. I'm always at least up to date on all my LinkedIn messages.
Same. I'm the only Keisha Theobald Van Gent on the earth, but definitely on LinkedIn. And I respond to every single message.
Yeah, LinkedIn, if you stop by, I'll give you a QR code if you want to send in your deck. There are actual humans and no AI involved.
LinkedIn, LinkedIn.
Okay, I'm going to be real here. Okay, which is to say that you can ping me on LinkedIn, and I think a bunch of you already have. So thank you. I just got to say though, practically speaking and realistically speaking, we are so overwhelmed with deal flow. We really need to find 2 or 3 people who are going to sort of attack me in the parking lot and say, Bill, you gotta listen to these people. I mean, that's just my, and I think it's actually true for all these people. They're just not telling you the truth.
Yeah, no, I'll jump in and say
We're online.
you need a personal intro, and lawyers are, by the way, so try and get this guy at the end, because a personal intro is what's going to get our attention.
Please do not attack any of the panelists in the parking lot.
Thank you, Rob.
Please. So now it's time for audience Q&A. So if you have a question for our panel, come around and ask away. This is not a pitch event, so do not deliver a pitch or a thinly disguised pitch. If you deliver a pitch or a thinly disguised pitch, you'll have to deal with Melissa, our bouncer. Joe moved to Vegas. So who's got a question for our panel?
Hi again. Thank you everyone for coming. I have a question since we're not talking about high tech and AI and quantum here. I have more of a question about economy. What do you think about the value of money in our day and age? Given the fact that our inflation is going up, and I know it affects your investments probably in one way or another. Just really wanted to hear.
It's hard to answer. Inflation is probably one of the biggest things we're all watching. Is inflation going to come back up? Because that affects ultimately how the big asset allocators allocate the money, and it can affect the liquidity engine we talked about, which keeps all of our grease flowing. I think the value of money, just kind of a general comment, every investor dollar you get should come with more than money. It should come with value add, whether it's mentoring, coaching, go to market, whatever. It's really important that they're aligned on your team. So.
But I'm sorry, just going back with some details compared to going back to 2018, let's say, our last kind of the dip in the economy. How do investments look like, ROI, or the sizes of your investments?
Well, yeah. So, I mean, I think one of the biggest issues is venture has been holding very tightly onto the capital. And what is going to happen, I mean, we sort of have an internal issue where we just basically do X amount of deals per year and we just force ourselves to do it. But many other firms have really pulled back on that. And what ends up happening is as the investment period of a fund tends to come to a close, money starts getting thrown around quite a bit. So that's something I think we all need to kind of keep in mind as entrepreneurs, that we are running up against some time cycles, especially in specific categories. So keep your eye on that one as well.
Are you a crypto person? Is that where you were going with this?
I'm not a
Okay. I was just curious if that's where you wanted us to go. Say, forget about money. Let's go crypto, right? Okay.
All right. Next question.
Hi. So I've been asked to ask a question by Rob, so here I am. So I've worked with about 200 startups over the last 2 years across different incubator programs, and I've seen patterns around difficulties that startup founders face around messaging, fundraising, creating revenues. What is an indicator that could help early stage founders from your perspective as investors? What's an indicator that shows this is going to go somewhere versus this is not going to go somewhere for you? Is there something you can actually throw out to the crowd that can help early stage founders? Is it going to be number of customers? Is it dollars coming into the door? Is it validation with a POC, with a large corporate? Something that indicates like, hey, this has legs and this is going to go somewhere, because I think that would really help a lot of early stage founders. So that's just my question. I'm deep, by the way. Thanks.
I think there are multiple vectors there, but one thing that I would harp on is adoption, and that adoption can represent itself in multiple ways. Sometimes it is people adopting PLG type of motion. You will see like in a lot of those startups being built that way, especially when you look at enterprise tech. Sometimes it's revenue dollars coming in. Sometimes it is it is like a lot of partners adopting, coming onto the platform, adding value there. So it's varies, but I think if there is one word that I would harp on as adoption, that's kind of what I look at. Is there a problem? And when there is a real problem that is being solved, you see more people adopting it. And
The problem is that most entrepreneurs, probably in this room, don't have a product release yet. Maybe, I don't know. But there are a lot of entrepreneurs that are starting out and they're still pre-revenue. And so, boy, how do you do adoption? And, so it happens, looking at a company this week that is developing a very interesting game engine, happens to be AI based, but they they took a very sort of high-end corporate market test approach. And what they did is they took pieces of their product and they found these English-speaking markets around the world, and they planted sort of thousands of seeds in each of these markets to see and said, look, this is this is an alpha, but what do you think, right? So very early on, very pre-product in a sense, they were in the market talking to people to find out, and they collected vast amounts of data that actually changed the whole trajectory of it. They're still pre-revenue, but that work to us says this team really, really gets how to build a successful company. So we look for these other signals prior to adoption to figure out, do you guys get it? Are you going to be able to get adoption once you actually release a product?
I'll give you 2 words. The first one would be execution. Anyone can execute. I mean, you can execute whether you're pre-revenue and you have customers or not. It is the ability to say, this is what I'm going to do because of the following reasons, and then do it, and then tell your investors, I've done it. And so as we start to see again and again, quarter by quarter, month by month, people that are actually doing what they said they would do, that builds confidence. And I think that's, to me, a good predictor. But the second thing is kind of the opposite of that, which is having the ability to sort of be opportunistic, which is, okay, fine, I was supposed to be doing this, but I've just heard this from the market or from a customer or someone, and I think this might be better, and then going out on a limb, and there's a balance between the two of them. You don't want your CEO to keep following or pursuing every shiny new object. On the other hand, you've got to have the confidence in them, and they should build that confidence in you that the pivot is good, and so on and so forth. So I would put both these opposing trends in there and let you figure out which is right.
All right. Next question. Next question.
Thanks, Rob. Hey, well, my question here is, I know that you guys help a lot of entrepreneurs with their next rounds, right? With following up investors and everything. But how about looking for new customers, like in the B2B space? What if VCs help out, like Bill was saying, spreading out some seeds in Asia, Latam, Europe, and having like allies, big allies that can help bring and expand their market in a parallel way, right? And helping them and having just a single role, helping them.
We do that all the time. That's like a fundamental tenet of what we do.
Yeah. I've seen
There's
it.
no but after that.
Well, I've seen it.
Most VCs should. That's what we all talked about, smart money. It's not just capital, but it's smart capital. And I think you'll see all the heads nodding. So if your VC hasn't done that for you.
Okay. No, I've just seen it because there's another opportunity there. And is that governments are now open and have like tech ambassadors that are now doing that for free. And okay, and I'm just talking about that because I have.
Free business development you got, I highly recommend.
Okay.
Maybe he just needs to hear what exactly you guys do to help startups. And I think he makes a good point because when you're just starting out a company, you're so focused on your product that you're not, thinking about the VC world, because that's like a whole other animal, right? Like, I mean, it's like everybody wants to profit from these startups, but like, what are you doing to help, and why should they be investing with you anyway? Because the good ones, they do have choices. So
Yeah, I mean, I think one of the most important things that anybody needs to do is understand us. And in order to get money from us, you got to understand us. And I think there are firms that are highly focused on BD. There are other firms that are otherwise. I think the biggest thing is we've seen a tremendous amount of Gen Z founders expecting us to do a lot for them. And that has been a real challenge. And I will tell you that, we're not going to do anything for you. If you say, I've got a hyper-targeted shot that I need you to take from me at Merck or XYZ company, and I know you're connected, and that board member plays golf with your friend, then we're happy to do that for you, right? But we're not going to, go sell your product for you. We're not going to help build your product. I mean, we want to essentially, we're the secret weapon that you pull out and you got one big shot with us every once in a while. If you use it wisely, you get a new one right away. It refreshes. So, that's what we look for. So,
Different VCs are different. So sorry. I just had to react to this guy. Different VCs are different. And so when you go and look for your VC, you need to understand who, what, how that VC and what they bring to the table. And as many founders as they are, and you ladies and gentlemen are all different, so are the VCs. So do your homework and kind of try to find the right match between what you want, what sort of handholding you're amenable to. Some people don't want any handholding. And whether the VC that you're thinking about accepting money from does that. And everyone here would do something different. Back to you.
Get references. Get references. This is a long-term partnership. It is marriage level partnership. Get a reference.
as my colleagues said, longer than the average marriage. I mean, we do prefer quick exits, but we'll just leave it at that.
So my approach to venture is, there are about, if you're an early stage entrepreneur, there are about 10 things or maybe 20 things that a founder needs to do. Recruiting, you got to get that customer, you got to get, a deal closed, whatever it may be. And our goal is to make each one of those 10% easier, right? And this compounding effect is very important where, you do those 10 things 10% easier, you have a 2.5x advantage compared to the next guy out there. So that's kind of, in summary, the role of a venture investor.
All right, next question.
Hi, I'm Dhaval. I'm doing a machine learning AI startup, computer science Stanford alumni. The question I had is, all of you are very experienced folks, have seen so many journeys in the different technologies, right? Where do you feel the current cycle that we are seeing, innovation cycle, where are we in the Gartner cycle? You feel we are in the hype stage? Are we in the mature stage, disillusionment? Each of you may have your crystal ball answer.
Yeah, I think we're in both places at once, right? No, so I mean, I do think it feels a lot like the internet boom, where you had a fundamental infrastructure change with the creation of the internet, and then you had this next layer on in terms of you had you had search engines and you had web browsers. Oh my God. Okay. So you had this incredible infrastructure created and then kaboom, right? Everybody and their brother launched an internet, whether it was B2C or B2B or whatever it was. There was an explosion that happened. And you know what came next. So I don't know that it's going to play out the same way, but if you think about it, I mean, we got this whole new layer of infrastructure out there. We now have all these tools laying on top of them. And so every high school grad can now create an AI agent to go do whatever they want you to do. And so there's this unbelievable Cambrian explosion of startup companies out there that are, and from our point of view, I should say my point of view, my partner may or may not agree with me, it's pretty impossible to predict around any given company whether or not they're going to win, because there are probably already 15 variations on the theme, and there could be another 30 happening in the next 6 months. And so my challenge, our challenge right now is, how do you play in this space? And so we got a lot of other places we can play. And meanwhile, we can watch everything that's happening. We can, throw a few, whatever toes in the water. And, but I'll tell you, if you are building an AI agent to do X, you're going to be really challenged in terms of, how any investor, it may be cool. It may be super cool and it may even perform, but right, you're going to be challenged. I think that's my concern.
I'll just layer on that. Totally agree. But like what Yash was saying earlier, the insights we're seeing so that you don't get smushed in the commoditization, the explosion, the hype, it's data. Like, do you have proprietary access to data that no one else has through your network, your customer's network, your university affiliations, whatever? Some data that says you will have the best vertical solution, and it'll be really hard for someone else to copy what you do.
All right, next question.
Thank you. Thank you. So first of all, my name is Sanjeev, Gigaforce. Nothing to do with Salesforce, nothing to do with Elon Musk. Not that there's anything wrong with that, but okay. So I had two questions here. First of all, Yash, that we play in the insurtech space, and I think some of the things that you talked about, AI, workflow, and multimodal part of it, I think we cover all three part of it. It's a B2B business. So my question here is to Jennifer and Bill. Jennifer, one of the question I have it is, when you're looking for a like strategic investor, what do you look in that the strategic investor? What are the things they're looking for?
What do we look for from a strategic investor?
From a founder perspective, what should we look as a strategic investor there?
As a when you say a strategic investor, you mean the investor money you get in being strategic, or one of the investors coming from a corporation?
No, coming from the strategic, yeah. How they can help us to grow the business there.
Yeah, well, we ask for a laundry list. Like, where do you need help? Like, give us your top 50 target customers. We'll dive into our network of chief product officers and make intros. Or do you need help fundraising, finishing the round, planning your growth round? Do you need help hiring? So it really, it depends on your strategy and when you have gaps to fill.
And your gaps, I guess,
It depends on your own gaps and your own metrics, and where we can understand where we can align our help.
Sure. And the next question is to Bill. Like you mentioned about the market size doesn't matter, but a lot of time we hear from the VCs, right, saying, "Oh, your market size is not big enough." You said that doesn't matter here. I think somewhere you said in your comments there.
Yeah, I mean, this is I think Jennifer was the one who made the same point, which is that for some god-awful reason, every pitch coach on the planet makes you guys do a Tam Sam Sam slide. And I have never met, and I'll let this poll the audience here, the panel here, I've never met a VC that believes you're TAM. It's just not a credible number. No matter how you built it, it's an irrelevant number is part of it. So the Tam Sam Sam, that's not the way to approach it. That's not the way to approach it. What we really care about is that you really understand your ideal customer profile. You are not going after millennials. You are not going small and medium enterprises. You're not going after the Global 2000. You've got to really articulate exactly who you're going after, where they are, who they are, how many of them there are, how you're going to reach them, how you're going to convert them, how you're going to onboard them, what they're going to pay, how you're going to retain them. That's what we want to understand. It's highly unlikely that you have any thought about going after a market where there aren't enough customers to build a $100 million business. And so, I mean, it's possible, but maybe there's a market that's too small. But I have never met a company where the market was too small. The reason companies fail is not because the market is too full. Why do companies fail? Everybody. They can't get customers, right? If you can get customers, you're not going to fail. Now, I mean, obviously, it's not 3 customers is enough, but you get my point. You get my point? Okay.
Thank you.
Okay.
All right, next question.
Hi, I'm Steve Chinani. I particularly liked Bill's comment when he said that product market fit is not the be all and end all in entrepreneurship. I think that's more relevant even in healthcare, like you said, when you invent a new molecule or a new radical invention, you don't even know if there's going to be a customer. You'll never know. So at what stage and how are you ever going to raise capital when everybody looking to invest in you is going to say, well, prove the market. Well, you're going to create the market. You're going to create the product market fit. You have to actually build it. So I'm talking about radical innovation, which is really what the VC industry was all about in the original days. People came in, invented a new semiconductor device, and they got funded. That was radical. There was no market for transistors at that time. So my question is particularly puzzling, I think, in terms of a lot of entrepreneurs out here who, and I've been on both sides. I'm an angel investor, and I've done 10 startups over the last 30 years and had 2 exits. But I would say that for a lot of entrepreneurs here, I think the puzzling piece is, I've got this great idea. I'm going to get turned down by every investor because I cannot prove product market fit. This takes the prior art to the next level. So how should they position themselves, or at least, coming to investors to get to a successful outcome as far as funding is concerned?
Product market fit, someone once put it like this for me, and I think it maybe makes more sense, which is product market fit is when the people you don't know start paying you, right? That's what we're talking about. And it's not a static thing. It's not, I did it and I'm done. It's always changing. You're always developing. You're always evolving what that means for your business. Every company has to get there, right? Because if you don't get there, you got to get there eventually. But before that, I think we talked about this a little bit, there are ways to show, hey, you know what? I'm not there. That's not where I'm at in product development. That's not where I'm at in the stage, the life cycle of my company. But I can show through we used to call it a smoke test or a painted door test even, where you put on a website, this is you're going to sell it. And then when you go, when instead of buy, it's like, put in your email address here and we'll email you in 3 years when we actually make it. I'm still waiting on a dishwasher actually, which is a different issue. But I think those are the types of things we're looking for. Can you get customers? Can you get pre-customers? Can you get people excited about what you're building? Can you get them to give you something, even if it's not money, it's an email address, it's a phone number, some traction toward a customer?
But particularly in healthcare, you're not going to get that because they have to go through so many regulatory
if you're
stages.
developing a drug, that is a very, very different type of investment process. And that is a highly specialized type of investment process. And you're going to be talking to experts.
Yeah.
And you'll be getting expert opinion and expert buy-in.
I don't agree with Bill on the drug discovery part. I mean, obviously, you wouldn't be developing a drug if there was if there wasn't a disease or something to cure it for. So why would you be doing it in the first place?
Sorry, give me the counter example. Give me the counter example.
Well, I'm going to jump in because this is funny. So we invest in food companies. In fact, if you go to Safeway, Alpha Foods, burritos, they're all over, right?
The dog,
That is
dog
the
food,
most,
right?
Yeah, that is the most effective product fit model you have. You actually send a tester to a grocery store with a product, and there's either it's all gone or it's not all gone. And so if you think about it, that's like binary for all of us, and then it goes all the way into slicing and dicing and slicing. So you're asking this like epically broad boil the ocean question now. You have to really dig into exactly what. If you're doing drug development, we're talking molecules. If you're talking burritos, I mean, it's just how much they eat.
Next question. So we have 3 more questions. Hopefully they're 3 quick questions, and hopefully they're 3 quick answers. So next question.
Well, thank you for the opportunity to present my question. I'm practicing physician from Newport. My name is Dr. Sani, and I'm very grateful for giving me the opportunity to present some of the ideas and questions. So first one is, we spent $4 trillion in the United States on healthcare. Why don't we have so far a software platform that can universally communicate with different centers, different patients, different segments of the market? What is the reason that we're not able to do that? And I may have some suggestion.
So I think one of the things which has happened is, there is this, when you look at the healthcare system today, there is HIPAA is everywhere. And one of the things, I have a lot of scars on my back investing, and I'm still excited about the new wave of innovation coming in from AI. That said, HIPAA has, I think, killed innovation in a lot of companies because it is so easy for those people who are in those decision-making process, who can enable that layer of communication, enable the layer of information exchange, to hide behind HIPAA, saying, okay, this is not HIPAA, we will violate HIPAA, we will violate. But guess what? There are technologies for everything. But there are these gatekeepers who are not enabling or who are not letting innovation go through. If that problem is solved somehow and these barriers are broken, I think it's needed. I mean, healthcare is. I've done 3 investments in the last 4 months in the healthcare space. It's needed, but this HIPAA fear is real and needs to be kind of disrupted somehow.
Well, HIPAA has only 3 things.
Yeah.
One is the data at rest and data in transmission should be encrypted and auditable. And if you fulfill these 3 things, You're good with HIPAA, with any software. I worked with Dr. Chrono, which is a startup from here. I was the first customer and advisor from seed level to until they were, purchased or taken over.
So, but the difference is that the people who are gatekeepers don't see it as simply as you do, because I agree with what you said, and it's easy to do all of those things. But the gatekeepers don't let this data information easily flow through.
I think partly because they want to keep partition that information for the system. Like here, all your major institutions, they're not communicating to the patient. In Southern California, I'm on staff at 3 hospitals. 2 of them have Epic, 1 has Cerner. And Epic one goes to my chart from one to the other, but they don't communicate with each other. So I think this is something we are working on to resolve it. And there are some segments of the market, for example, ambulatory surgery center, which never got federal grants for creating the EMR. That is easily addressable market. Thank you.
Yash, I think the point is he actually knows what the answer is. It was a trick question. and you know how to solve it. So if you could, then go solve it and get some people to support you in solving it, and then come to us and we'll fund it. Okay?
All right, now we have next question.
Yeah, hi. It was a nice discussion, actually. I'm Kiran. So I had just 2 questions. Like, I'm hearing a lot about this. SaaS is dead, and the AI is going to dominate everything. Like, I just want to understand from the panel's perspective, what would be the future of AI?
SaaS is not dead.
Is that okay? So my second question is, like, if someone is coming with an idea or a small prototype, so what's the way to get funding around $50,000, something like that?
High net worth individuals, friends and family.
Not the panel here. No. Okay. Thank you.
Priya, did you do a mic drop? That's a first. All right, next question.
Ephraim, I know you talked a little bit about how Gen Z founders are a little bit different than their counterparts. I'm a Gen Z and I have a bunch of friends who are developing companies as well in the same age group. And there's this other tendency that I've seen is different as well, which is pivoting. So they would start with one thing and then move to the next hot thing in like 2 months or something. So I just wanted to know how open are VCs to pivoting, like changing the whole track altogether.
Well, I mean, that's an incredible skill, and we really do look for the ability to pivot as a founder. The difference between pivoting and having sort of ADHD about a product is really important. And again, that is one of the challenges when you look at the Gen Zs. You've got to be able to follow through, and it's really our fault, and the companies we funded, i.e., social media, other things that are out there, that have created a very short attention span. The biggest problem is we also have very short attention spans because we're very overwhelmed with a lot of things. So when you put 2 people with 2 short attention spans together, it's like ships passing in the ocean. Maybe they'll see each other, maybe they won't. So my recommendation there is I have seen very, very talented Gen Z founders. They're the ones that can find, like what I was talking about, the conviction and the ability to stay with it. And one of the things is that it's highly influenced. So authenticity and conviction mean a lot. And when I was giving those 5 tenets, I was really aiming specifically at Gen Z founders. I was, a Gen X founder at one point, and someone lectured me on all these things too. So I'm just passing along.
Thank you.
Okay, I'm giving this special honor to ask a very quick question and quick answer. Mostly this question is for Bill. I really appreciate to hear that there's a VC talking about we don't look at market fit. Yes, because when SpaceX, Tesla came out. So my question is, now we can see also tonight we are not talking about AI. And meantime, I wanted to come back to the AI topic. We are in a very tight race right now, and ChatGPT, now DeepSeek, and then NVIDIA in the dominant position. So my question for Bill is, where do you see the most, you mentioned the AI agents everywhere. High school kids can build one. Just like the internet era, everybody can build a website. We are in that position. Now, where do you see the next Uber type of company, the real disruptive company like Uber and Airbnb? It's going to come out from the real world, not just the NVIDIA technological world or ChatGPT, OpenAI dominant world. Where is the next Uber coming from the real world, having real application in the real world?
I have no doubt whatsoever there will be a bunch of unicorns that come out of this era of AI agents. It's just that I have a lot of doubts about our ability to pick them early. And so we have the luxury of planting a few seeds, watching what happens, and waiting to see what emerges from this marshland of AI agents that is developing here. So I'm not going to pretend that I'm going to pick, the next unicorn to come out of this. Unfortunately, I have the luxury of being able to wait around to see what pops up.
So just one touch. So do you see something, most of this, my wait until AGI is achieved?
No. So again, I got into a lot of trouble in 2014 when I went on a interview and I said, AI is not an investment thesis. Believe it or not, back in 2014, AI was like a really big emerging new thing. It was amazing. People were excited. Yes. I made my first AI investment in 1989, and I thought it was too late.
04 had an exit, thought it was a done deal.
So in any case, again, I'm not going to try to figure out exactly where it's going to happen. I think we're going to have unicorns on the consumer side, on the entertainment side, on the life science side, on the material science side, on the corporate, on the enterprise side. We're going to have unicorns popping up all over.
Thank you, Bill. It's a great event.
Right. Once again, let's give it up for our panel. Applause. Let's give it up for Armin, our moderator.
Thank
And
you.
let's give it up for Susanna, our co-moderator.
Thank you, everybody, for coming and joining us this evening.
Not done. Let's give it up for Perkins Coie and all our other sponsors. Let's give it up for our event team and our video team. Let's give it up for Melissa, our bouncer. I know you guys miss Joe, but Joe's in Vegas, but he'll stop by every now and then. Let's give it up for me. So as I mentioned, there is an after party. There are 3 possibilities. Ideally, we need to leave the building by 9 p.m. Here are the possibilities for the after party. The Rosewood. No comment. The patio. Pizza My Heart. Drum roll, and the winner is Pizza My Heart, because they stay open till midnight. So let's go out on a happy birthday.
All right. Well, it's not going to be like Marilyn Monroe's happy birthday, but you guys better join in. It's happy birthday to IPO. Happy birthday to you. Happy birthday to you. Happy birthday, dear idea today for you. Happy birthday to you.
So we have lots of food for you to take home. The delicious buffet continues, and we have another cake. This time it's chocolate, equal time. So network, socialize, connect, take some selfies with these celebrities. Enjoy. See you next time.